high dividend stocks in Bursa, Malaysia for 2024. 2 high dividend stocks a week for dividend lovers like you. Builds your passive income to replace your active income. These stable dividend stocks are currently giving 5% or above just for the dividend returns. Kicking things off, we have Kimlong Resources. At the current price, dividend yield for the past 12 months at a respectable 7.4%. Kimlong Resources is a Malaysian palm oil plantation and milling operator with operations in Johor, Sabah and Sarawak. For the past 1 year, its stock price has been stably range bounding between RM1.90 to RM2.10. Now, how likely is this dividend payout can be sustained or even go higher in the future? For that, we look at the percentage net profit margin by dividing the net profit with revenue. In this case, you have 162 million divided by 1.9 billion. Now, that is 8.5% decent profit margin. And this is coupled with a decent latest net profit growth of 19% from 136 million to 162 million, lower compared to 44% the year before, that is 2021. A disclaimer, this is not investment advice, it's also not a recommendation to buy the dividend stocks covered, as I do not know your financial needs, circumstances, risk appetite or investment objectives. Then next, we want to look at these stocks dividend risk to you. For this, we look at a company's leverage and shows to the extent to which its operations are funded by lenders versus their shareholders. Now, in the business world, a gearing ratio refers to a company's financial leverage, essentially how much debt they use to run their businesses. Debt can help a business grow faster, just like in racing. Higher gears lead to greater speed, but too much debt can cause problem. If interest rates rise suddenly, heavily geared companies can go broke overnight. Now, gearing is your total debt minus your cash divided by shareholders' funds. For Kimlong Resources, its gearing is at low 6%, no big deal and nothing to worry about. Pantech Group Holdings. At the current price, dividend yield for the past 12 months stands at 6.6%. Pantech Group Holdings is one of those boring companies that would never make any news headlines. They are involved in the trading and manufacturing of pipings, fittings, valves and other precision components, primarily to the oil and gas sector. But it is far from being a disappointing Malaysia dividend stocks though to park your money in. For the past 1 year, its stock price had been uptrending from 70 to 90 cents per share. That is over like 20% gain. So how likely is this high dividend payout can be sustained or even go higher? For that, we look at the percentage net margin past 4 quarters by dividing the yearly 2023 net profit with revenue. In this case, is 115 million divided by 1 billion. And that is around 11%. Growth-wise, massive growth. 26 million to 71 million. It rebounded strongly post-pandemic, 171% even, and then another 61% growth from 71 million to 115 million. Impressive. As usual, the next thing to do is to look at these stocks dividend risk to you, checking for possible red flags. The gearing ratio measures a company's debt burden. When a company takes on loans to buy more assets that generate that juicy returns, which can ramp up profits fast and furious during good times but tends to crash the hardest though when the economy is in a bad shape. Pantech Holdings' gearing ratio is kept intentionally low at below 30%, so is low risk in this case. Of course, this may improve or worsen in the future, so if you want to be aware of future changes, do follow and subscribe. If you prefer weekly email update, there's a link in the description below or in bio. Questions, ask below. Here's your next high dividend stocks clip to watch. There's an entire series of this. Also check out more of these global investment strategy videos updated monthly only for CF Liu channel insider members.